Hello everyone, welcome back to this channel. This is Pranita Amin, and in this video we're going to learn how to draw trend lines. So before we begin, there's something that I expect you all to know, which is what is support and resistance. And in case you all don't know what it is, I have a video on it already on my channel. You can go and look at the playlist section. One of the videos in the playlist is support and resistance. It's there in the title itself. The title is probably how to draw support and resistance. So that's something that I want you to know before you watch this video. So in case you haven't, go see that first. Now let's start with trend lines. So trend lines and support and resistance are very similar. Support and resistance are basically horizontal levels of supply and demand, right? The demand being the support region, where whenever price comes at the demand region, price moves higher. Whenever price comes at the resistance, which is our supply, price again heads lower. So the market is basically stuck in these two horizontal regions. But in trend lines, what happens is that these supply and demand regions are nothing but support and resistance, but they have a certain angle in them. What I mean is that in normal support and resistance, you know that price takes rejection from a certain level. So let's say if somebody says that 18,000 level of Nifty is resistance. So what do you infer from that? That whenever price comes at 18,000, price is taking rejection from there and heading lower. So let's say market is at 17,800, it goes to 18,000. It's very likely that market is going to reject from there and again come back to 17,900 or whatever. But here in trend lines, what happens is that you don't have a certain level as such. You rather have an angle. So if I were to let's just start with Nifty. Okay. Now Nifty, mein, the very first thing you need to understand is that you have to see. Let's draw a trend line that's actually indicating supply, as in a trend line that is showing us rejections. So over here, what are the levels? Like just take this region for now. What are the levels that you're seeing from which price is being rejected? Now I want you to pause the video, think about it for a second, and after that play this again so that you also think about it. I don't want to just randomly just go with me. So the very first level is this point, right? This one is very evident. This is where there was rejection. What was the next point? This point. Market fell from here, gained a little higher, again gave us a good fall. And after that, what was the next high after which it gave a certain fall? It was this level. So we have three levels. Now to draw a trend line, right? Normally people tell that they want 3 points. But for me, how I draw is I just need 2 points. I draw it with 2 points. So now that you have significant rejection zones, what you simply do is you join them. You join them and you extend them, because if you're joining them, there's no point if you're just simply joining them. You also have to extend them so that you know ki next time where can price be rejected. So now this is how you draw a simple trend line. But there are very two simple rules, right? Very two simple rules. And I'll just write them down for you. One, try connecting as many candles as possible in the trend line. The second rule is don't cut any candle while it's being connected. So basically, any trend line should not have any candle that's cut in it. Like what I mean is that let's say this should not happen. You see, like if this was a trend line, assume the trend line is going within the candle. This is something that you have to avoid. So now look at over here. Okay, what's happened over here? Even let's neglect this point. Let's think that we do the trend line based on just the first 2 points. All right, we take the first 2 points and we further extend it. We're just using these 2 points. Coincidentally, what has happened that market after failure, it moved higher, and the next point that it took rejection was this zone, which was our trend line rejection. So this is how trend lines work. They show you probable areas where there'll be rejection. And how do you trade trend lines? Now see, one example of trading. So again, when do you get the trend line? After these two points are made. Now there are two ways of trading trend lines. One, either when the price comes at this level, you see if the price is showing weakness. If the price is showing weakness, you can go short here and you can make money, right? But in case if the price is breaking this trend line, which at this region it's doing, then you can go long and then you can probably book accordingly. So basically, this is how you trade a trend line. As long as it's within the trend line, you can look for short opportunities if there's weakness. But if it's breaking the trend line, that's when the prices are reversing. That's when you're understanding that all the sellers who are selling here, now they are no longer present. Now the bulls are more active and they're trying to drive the price higher. Now I want you to see that in this trend line itself, there are very micro trend lines visible as well. So now this is our one trend line, okay. But can you see at these retracements that have come? Don't you think these are also a kind of trend line? Over here, don't you think this is a trend line as well? And here I wanted to see what did I do while I was trying to connect. One, I was trying to get as many touches as possible. So 1 touch, 2 touch, 3. And I would consider this and this as well because it's very close, but it's not a proper touch. So again, over here, when could you go short? Right over here, right? There's a bearish hammer. You see that price has even rejected from here. I wouldn't say this is a proper evening star, but in a way it is kind of like an evening star. After that was a breakdown and that was a good downfall. So even this is a trend line. Now a lot of you might be confused that should I take the body of the candle for connecting or the wick of the candle to connecting. Like one trend line could be just drawn like this, but I'm connecting the wick. Okay, so how I do it is that I draw 2 trend lines. One that is body to body. This is connected, the body of this is connected to this body, and then I'm extending. In this case, there's a wick, and I'm just extending the wick. Now, the reason why I do this is because I don't believe that there's a certain line of only supply or demand. Because that doesn't make sense, right? You cannot say that only a certain line of supply and demand. What I feel is more, rational to say is that there is a zone of supply and demand. And for me, that zone is something that the wick tells me. So for me, this entire zone is of demand right here because price is moving higher, right? And when this demand is broken, that's when you know that there's no longer demand here and price is going to go lower and find a new level of demand. So this is how I draw trend lines. If there's both a wick and the body, when I'm doing body to body, it's only going to be body, and the other case, it's only going to be wick connection to another wick connection. Now let's just move high, zoom out, and let's see if we have more trend lines that can be made. Now see, this is also a trend line, but it's too steep. Like I was taking wick to wick. In a way, these are also trend lines. This is also a valid trend line, like support, maybe not proper support, but again support. When the price broke this trend line, again we had a very sharp fall. If there's one thing that in the end of this video, I'll talk further about such kind of trend lines. Now let's just understand on how to draw trend lines better way. So now again, let's take this region from here till say somewhere over here. Now in this region, I want you to think where can you make a trend line. Again, let's pause the video, think about it. I'm not going to explain now, but I want you to pause and think about it. So again, let's do it stepwise. What are the levels where price is taking rejection? One is this level, then this level, then this level, and again this entire region, right? So now that we know that these are the levels from where price is rejecting, we simply try to join them. Take this. Now see, I have an option where I can join this two and extend. But when I do that, what is happening? This candle is getting cut, right? And even these candles are getting cut. So that's something that we cannot do. So that's why we further move it to the third rejection point. When we're going to a third rejection point, we see that the other candles are not being cut. So let's say if I were drawing this trend line based on this, we see that even at this region, it was obeying it properly. Now, when you have a trend line rejection, and there's something else which is very evident over here, which is our support level, right? Support. So now if trend line is showing us rejection, support is being broken, then it's a very evident short position, right? That could have been built over here. Now, when is the trend line being broken? Let's just further extend it. It's around this zone. The price broke the trend line, meaning that now All the sellers here are no longer there now. Bulls have taken bulls are basically overpowered the sellers, and after that there was a retest, and that was a good upside move. Same thing again here, we come back and we'll see that there's another trend line that's possible over here, right? But do you see the trend line didn't work in this case? What happened was there was a breakout and there was a very massive fall. Now let me take another example. Let's take a stock. I take Infi because it's very visible trend lines again. So in this region I wanted to think of where can the trend line be made. Again, very simple. We take the first level of resistance and first level of rejection and we further join it. Now this is one way that I'm trying to connect body to body, right? I think if I were doing only body to body at the very start, this would be the level. Another would be wick to wick, which is this, right? So now for me, this zone is zone of rejection. I won't look only for shorting at this levels. I might also look for shorting around these levels as well. So this entire zone for me is a zone of supply. We had a breakout, price moved higher. Then again at this level, we again had a trend line that could be formed. We take the levels of see, I'll take these two levels and further extend it. This is how I draw my trend line. 1, 2, 3 touches. Now in a way, this has cut the triangle, or this has cut the trend line. Not very well, but kind of. And this has happened because of a gap up. So this is something that we can ignore. Include in a rule of not the trend line not being cut with the candle. Again, when this broke out, we had a good upside. Over here, do you see another trend line that could be formed? Right? A support trend line. When this was broken, a good fall came in. So this is how we basically draw trend lines. And if at this current level we were to draw a trend line, we would see that be something of this sort. So right now, if I were to expect Infosys to come back to certain this levels, this is where I'll again be bearish on the stock unless it breaks a trend line, after which we'll be bullish. So this is basically how you draw trend lines. And in case you're like worried about, in case it's not very clear to you, I want to tell you that just practice it more. You'll get it eventually. Like probably like go on Bank Nifty or something, go on like a 15-minute point and just look what are the very obvious levels of rejection and obvious levels of pickup. Like over here, just price is moving higher from here, price is moving higher from here, price is moving higher from here. All of these are levels of support. What could be a level of resistance? This rejection. Now see how you normally treat this is that now, because we are doing it on past data, you're seeing that okay, price is rejecting here and here. But normally how we draw trend lines is we simply look for 2 points. Let's actually use the replay button over here. Alright, so at this level, at this point, only this much has been formed. We take this candle body, further extend it. So now what do we say is that next time the price comes over here, this is where it's going to show us rejection. And then we wait. You see price came here and showed rejection. If you have seen my 26th May trading video, you'll see that I kind of traded on this concept. I was bearish because I saw that trend line the price was taking the trend line rejection, and that around this level is where I've shorted the market. So if you want to see how actually I trade using trend lines, you can see over that. And also something that I want to talk about in this video is that I am not someone who trades solely on trend lines or on support or resistance. But I think it is very important that you know what trend lines are, you know what support and resistance are, because the whole basis of the market is trend line, support, resistance, and all of this. Because even when there are fake outs, right, like the only argument behind trend lines not working or breakouts or support and resistance not working is that there are a lot of fake outs. But to understand fake outs, you need to understand what trend lines are. You need to understand what support and resistance are. So in no position you can say that I do not need to understand what trend lines or support and resistance are. You need to know that, because then only you'll understand what fake outs are, how fake outs are done, how can you take advantage of fake outs. If there is fake out that's happening, why do you think you cannot make money out of it? You can make money out of it. So that's another thing. And the thing that I want to tell you in the later part of the video is that, see now, trend lines, right? Let's say if a trend line is being drawn with a 45-degree angle or something. Wait, let me, I think there's a tool for that. Yeah, so one thing which I wanted to cover, which I said in the basis of the in the middle of the video that I'm going to cover at the very end, is that the angle of a trend line is very very important. For me, how I see it, that let's say 45 degree, right? Any trend line that is being formed under 45 degrees, I'll consider it to be a healthy trend line. What I mean is, like, let's say if this is the trend line, right? Or let's say anything under 45, let's say 33. If price is coming at this point, taking support, taking support, taking support, I will be kind of okay, like, I'll be kind of bullish in all these regions. But in case the trend line is not 45 but greater than 45, so 50 degree or whatever. In this case, even when price is coming at this level, these levels, at every level, I'm going to be bearish because whenever this is happening, and this is also a different another pattern called a wedge. And in a wedge, what happens is that the angle is very steep. So any trend line that has a very steep angle is a trend line that I'm waiting for to be broken. So if a trend line with a very steep angle gives me a breakdown, I will definitely trade it. But if there's a very like let's say a 25 degree trend line that's being broken, then I might not trade it with as much conviction as a 51 degree, because what I've observed is that when there's such a steep move, the breakdown that comes gives a very good downside. Over here, what would happen is that it's given a breakdown, but what was it last peak? The last peak was around here only, right? So it normally takes support from here and again either consolidates or moves higher. So for me, this angle is very important. In the downside, it's the same thing, but it's the like where is it? Yeah. Let's say it's 45 degree. I think 45 is also a little wrong. I'll say above, let's say below 30, right? So if it's 30 degree, it's a normal fall for me. Like I wouldn't be as bullish. But if it's something like 45 or 50 or something like that, then I'm going to be bullish, because the moment that there is a breakout that's going to come, it's going to give a very good upside. That's the same reason kind of, right? If there's so much aggressive selling, the short covering will also be massive, and also the long that will happen will also give us good upside. So this is something which I also wanted to cover in this video, and that is it for this video. I hope I was able to explain trend lines in a good manner, and in case you all have any doubts, please just put it down in the comment section and I'll definitely get back to you. So thank you for watching, and I'll see you in the next video.